Welcome to Markets Now. I'm Michelle Rourke with John Heinberg of Total Farm Marketing. A mostly lower day in grain and livestock futures trade, I think with the exception of feeders. But John, let's talk about the grains first. We didn't get a whole lot of fodder in the USDA report here in March, and the market drifted. What, more so because of the risk-off mentality from the outsides?
I think that was a big factor today. I mean, obviously, quick summary of the USDA report, nothing changed on the corn side. Soybean side, they shuffled 3 million bushels from seed to residual, basically leaving nothing changed there. So we didn't get the demand adjustments the market was maybe hoping for on the corn side of the equation. Soybeans, the market was pretty much expecting it to stay fairly steady in terms of supply side. So with that, we had a little buying strength going into that report today, and then we just continued to just kind of drift lower going into that lower close. I really do think the outside markets, the weakness we've seen in the equity markets over the last handful of days, just maybe bringing some more risk off type trade and the market space in general. Like you saw that in most of the commodity space today, not just grains, live cattle, hogs, selling pressure there as well today, especially in the front end of those markets. So it just kind of felt like we're at a spot here where money needed to move to the sidelines. They still have large, long positions in terms of that core market, and then maybe just walking away from some of those positions, maybe handle some of the losses that some of these traders are seeing in that equity market as it continues to tumble.
So my question for you is, if we keep talking about recession here, if we keep this risk-off mentality in the outside markets, what happens in the ag space? We've already had some fund liquidation. Do we see a lot more?
I think it's definitely on the table. I mean, you need some positive news to keep rallies going, and we've had some pretty good price recovery, obviously, after the hard sell-off, picking up 30 cents a bushel on corn and not quite as much on the soybean side, but the outside dynamics of that market are still weighing heavily on bean prices. So going forward, to me, a little bit of the blooms off the rose here, per se, in terms of that strength in the corn market, the $5 plus levels that we saw. I was hoping maybe we get back a little bit higher. Than I'd probably look to be a bit of a hedge or a protect here, some old crop bushels, just because of that, again, that risk off mentality that we could see continue to build. We need some positive news. Like I said, we didn't get anything on the USDA report. Now we're going to be thinking about a big acre number coming for corn. It might just make it a little bit easier for this market to gravitate back softer here in the short term, unless something were to pop up on the demand side to get this market moving again. So right now, it just feels like the energy in the markets in general is just becoming a little bit more of a fear or risk off mentality.
Now, Judd, you said we did not get that demand confirmation, especially on corn. Will we get it at the end of the month in the quarterly stocks? Is that where it shows up?
That's a place it could show up, and we'll have to see, because obviously corn disappearance, other than the feed side of the equation, we know what the exports are. We know what the ethanol grind's been in the first quarter, so those numbers will be concrete, and at least we'll see that number out there. So that's an area I think, when we watch, that could be probably the sleeper number in terms of that report at the end of the month, because we pretty much are assuming, as in the marketplace, that the corn acres are going to be there. So that feed demand side of it, or that usage side for the first quarter, could be that number that could give this market some support, or maybe find some bottom here going into the end of the spring.
I want to talk about tariffs as well. Obviously, the president doubling down here today, raising steel and aluminum tariffs on Canada again. We are supposed to revisit the ag space and the USMCA tariffs at the end of the month, maybe reciprocal tariffs on April 2nd. Does the market sell off again like we did this last month?
I hate to say it's going to be on the cards if we don't start seeing some progress to possibly move that away from that deadline. Again, we dealt with it when the tariff talk first came out, then we moved it back to March 2nd. Obviously, you saw the reaction around that window, even though nothing really came into place because of the agreements that came together. I hate to say it, if the market's mindset is going to be risk off with these tariffs, we get closer and closer to April 2nd, which is obviously right after the acres report, we could see that action happening again, unless some type of an agreement is met, just to keep things kind of status quo.
So from a technical standpoint, John, we did have corn and soybeans running up into some pretty strong moving day averages, right, today as well?
Yeah, we made a nice move back up in terms of that price recovery. Ran into some of those technical barriers there today as well. You just looking at 470 on the May, July hitting 480, just some round numbers that can keep this market in check. I thought maybe we could find another 10 cents, and maybe we do. Maybe today was just more reaction to the USDA report not providing any bullish news at all, and regarding where this corn supply is. But we're at an area now where it's starting to feel like things are a little bit valued here, or a little overvalued. That producers, if they got some old crop bushels, is probably an opportunity to take advantage of this price recovery after the sell-off and take a look at it. I'm just not liking the structure of the market as well. We're putting a lot of carry in the market right now. We got 20 cents from March to July. If the demand, with the South American corn crop coming in that July window, is this turning into a market where we bleed the carry out as time goes along.
And as far as the wheat market, like it needed any more bad news, but a 25 million bushel increase in U.S. ending stocks, 2.5 million metric tons on the global space. And, does that market continue to have to slide here, you think, as a result?
Kind of just looking at the chart today, it actually handled that news fairly well. I think the market's still going to be very focused on what's going on in the Black Sea region in terms of weather. We got that Russian crop, not much of a change. I think they moved it up just a tick today, but still down 10 million metric tons from last year in terms of production. They still drive the global price in terms of wheat and the export side of it. So, getting that bump in terms of the U.S. carryover and only down a nickel today, I think there's some other things that keep this market a little bit more active. Really watching the southern plains, what's going to be happening there on the weather front, especially as we get this KC crop out of dormancy, and then obviously what's going to be going on globally in terms of wheat production. So today, at least, we did price in that report a little bit and that little bit of a bump and carryover, but I still think the market's got a very close eye on some of those bigger ticket items out there in terms of weather on the global scale.
Live cattle futures set back here today. Obviously, we're keeping an eye on what's going on with the stock market there. So that was part of it, wasn't it?
I really think so. I mean, we're at a point where I've been saying the last couple of days, there is correlation between equity markets and cattle markets. We had a big jump in choice retail, 470 higher midday, and we got no reaction out of that. We continue to see prices just kind of hit that $200 psychological level on the April contract. Didn't get blowing through it, so we faded out of there today. Maybe it's setting us up for cash trade later in the week. We'll see how that plays out. We had such a discrepancy between the north and the south. We'll see if those bids balance a little bit more this week. So with that, at this stage, the cattle market saw a little bit of profit taking here today, just squaring up positions, just maybe looking forward to see where we're going to be at the end of the week. But I do think that equity market could still weigh on some of them long position in cattle and hogs.
Yeah, it's surprising that we hadn't had more pressure before now. I thought we were very resilient in the cattle market prior to this, but was it just because cash trade news has been so good?
I think that was the biggest factor, giving us the shot in the arm that we had at the end of the week. We fell down that April contract just under 190, hit some pretty good support there, and then we just saw some technical buying kick in, throw in a big jump in that northern cash trade, and the market, scampered to quickly catch up to it. Now again, maybe we're a little bit more stabilized or focusing on those outside markets and what's happening in terms of that equity market. Maybe prices just stabilize here, but again, cash is still king, so we'll have to see what happens with that at the end of the week. If those bids do creep higher again, this market will find some footing and maybe they make that next little piece up and go challenge those highs from just a month or so ago.
Yeah, that would be interesting. All right, hogs set back here today. Profit taking, did we just run up into some chart resistance, you think?
I think that April contract was starting to get out of where it skis a little bit there, tightening up its gap a little bit with the index in terms of that time frame. Again, with that too, we did run into some barriers, 100-day moving average, also retracement points today. So it's probably a great spot for some profit to come off that April contract. Did like the fact that the summer hogs still at least held in there. Yeah, we're down on the day-to-day, but those are pretty marginal losses as the bigger picture still looks fairly friendly for hogs. But we might have to get through some shakiness here in the front end, especially with some liquidation on some of those long positions. But the funds really took a lot out last week.
Absolutely. All right. Thanks so much, John Heinberg with Total Farm Marketing. That is Markets Now.